So you made a ton of money last year, and guess what? Now it's time to pay Uncle Sam. What are you going to do? Well, you're going to watch this video, because in this video, we're going to give you a few tips, a few things that you may not know that can save you a ton of money. And if you stick around, we're going to tell you how you can possibly buy a G-Wagon or even a Tesla Model X. And guess what? Drive it for almost nothing. We're going to get into it right after this. If it's your first time in the channel, welcome. Hit that subscribe button, tap the bell for notifications if you want to be the first to learn everything that top producing real estate agents are doing to stay on top. Guys, my name is Will. The team and I, we get calls, texts, and emails from viewers just like you looking to take their business to the next level. So if you're looking to be a top producing real estate agent or you have any questions, do me a favor. Send me a call, shoot me a text, drop me an email, and I will respond. As I was mentioning, today we're going to be talking about tax strategies. Again, I'm not a tax guy. I'm not a tax man. I'm a real estate agent just like you guys, but I'm going to have one of my fellow Panthers, my guy, Rob Cambrice, representing the city of New Orleans, representing CAU, and both of us together are going to have a quick little conversation about a few key things you guys can do on your taxes to possibly save some money. You got to pay the man. You got to pay Uncle Sam, right? So we're going to give you a few strategies. So without further ado, I'm going to bring in Mr. Rob Cambrice. Rob, what's happening, brother?
Hey, Will, how's it going, man? Appreciate you having me
Man.
on.
Oh, man. Appreciate you. Appreciate you. So we're going to get into it today, guys. So stick around. Again, stay to the end because we're going to save the best for last. But today, Rob, I want to talk to these top producers, these top performing entrepreneurs out here that it's tax time, right? So they had a great 2022 and it's time to pay Uncle Sam. So I want to go over the top 3 tax strategies that they may not know of. And we talked about those. What are the top 3 tax strategies that you think we want to talk about today?
Well, 3 strategies that I would suggest as a entrepreneur, a real estate investor, business owner. The Augusta Rule is one. The Section 179 bonus depreciation is number 2, and the last is structuring your business the correct way. So those are 3 things that we can talk about today.
Awesome. Well, let's get into it without further ado. Let's talk about what is the Augusta Rule. Like Augusta, isn't that in Georgia?
Yeah. Actually, so that's where the rule actually stemmed from. If those of you who don't know or aren't golf enthusiasts, the Masters is played in Augusta, Georgia. And during, I want to say in the 60s or 70s, around that time, don't quote me on the dates, the residents that lived in that area, they would rent their houses out to golf goers and those that just love the game of golf. They were rented out to those people that would come and visit in the town. And the IRS created a rule that would allow them to receive that income without paying any taxes on it, as long as they didn't go over the 14-day rule, which means basically if you rent your house out for at least up to 14 days and didn't go over that, then you can receive that income tax-free. That is huge.
Wait. Did you guys hear this? This dude said that rich people, right? They can rent their houses out when other people come to watch other people play golf. This is insane. So, but what he mentioned is that we can take advantage of that. Again, without giving all the sauce, like how can people take advantage of that? What would a person like me do?
Yeah, so basically, let's say if you want to go out of town, for example, and you have some friends, family, relative, frat brothers, whoever wanted to come in town, and instead of paying the hotel rates, you say, hey, you guys can rent out my house for a couple of days if you're just going to be here. I know you're not going to mess it up. So what you would do is just have them come in just like you would with, any type of rental, Airbnb or anything like that, set up the rates and just do, simple transaction with them. And have them pay you instead of paying the hotel fees or Airbnb. You'll basically be your own Airbnb without being on the platform.
Love that. Love that. Love that. All
Mhm.
right, guys. So that's tax strategy number one. What's
Yeah.
number two?
Number two is the bonus depreciation or Section 179. As you
Wait,
mentioned
wait, no,
in
no, no.
the
Let's hold that to the end. Let's hold that one to the end. We're
Okay,
gonna
you want to
save
hold that
that
one?
one.
Okay,
So
all
stick
right, all right.
around because he's gonna tell you how you can buy a G-Wagon. Okay,
Okay.
let's go. What's the second one?
Awesome, awesome. No problem, man. So we're going to go into your business structure or your business entity. LLCs versus S corps. I get that a lot. You know,
Okay.
what's better, what's best? Are there any tax benefits to either? So just to clear it up, I'm a tax professional. I'm not an attorney. So everything that I say will be tax advice, but it'll be general advice. So it's not to your specific situation. But LLCs is basically stands for a limited liability company, and what that does, it protects you from protects yourself from your business and your business from you. So it's a separation. So your LLC will basically stand on its own, and you'll basically just be the owner or member of the LLC, unless you have business partners or other people that you work with. Now you don't get any tax strategies from having an LLC. It's similar to us being the sole proprietor. I mean, you're just operating the business, but you don't have any entities set up. Now, in contrast to that, there's the S corporation, which is an election that you can get through the IRS for tax purposes. Now, this does gives you some um, tax advantages, depending on how much money you generate throughout the year. So I like to tell people you definitely want to get with a tax professional or a
Hmm.
strategist, CPA, someone that knows the tax laws, to see when is it best for you to switch from an LLC to an S corp, or should you just start off with an S corp. Now, some of the tax strategies or the benefits of an LLC, I'm sorry, of a S corporation, is that you don't pay what's called the self-employment taxes.
Mm.
So you save about 15.3% on your income, just by switching over to an S corp from an LLC. So if you make $100,000 a year, you'll save yourself about $15,000 in taxes just by switching over to an S corp. Now there are some nuances to that, but it's definitely a tax benefit.
I don't know about you guys, but I'm switching to an S corp. Well, I'm already an S corp, right? But so that was awesome. So again, guys, reach out to Rob. I'm not a tax professional. He is. We're not attorneys. So definitely consult your attorney. But now we get into the good stuff, right? So why I'm in California. When I first moved here, man, I'm like, what do these people do all day? Because everybody's driving luxury cars. I
Mhm.
want to know how I buy a G wagon and write that thing off.
Yeah, yes, sir. Yes, sir. Well, that's been one of the big talking points over the last 2 years. Everybody wants a G-Wagon. But basically it's section 179, the bonus depreciation of the IRS code. And that basically says that if you buy any equipment, it could be a vehicle or machinery, the IRS gives you a special bonus depreciation that allows you to deduct the full cost of that vehicle or that equipment within the first year of owning it. So basically, like we said, we're talking about the G Wagon. A brand new G Wagon straight off the lot would be what, 130, 150, more than that?
180, 180. You
180?
buy it today, you might get it for two something. Yeah, yeah,
Oh,
yeah, yeah.
wow. Okay. Yep. So
180
either
sticker
way,
price.
yeah. So either way, 180, you can deduct the full cost of that 180 in the first year. Now, let me backtrack a little bit. That actually stopped in 2022. So you can't deduct the full amount of it anymore. But for this year, you can deduct up to 80%. And then for
Okay.
the following years, it'll decrease by 20% until it all phases out. So for this
Oh
year,
my
for
goodness.
2023, you can still purchase that G Wagon, but you can only deduct up to 80% of it, instead of the full 100% of that, the cost of that vehicle. So
Dope.
that is huge, especially if you have a significant year this year. You
Yes.
guys are selling a majority of your homes. That's a great deduction that you can use if you're in the market for a new vehicle.
Dope. Well, guys, you heard it here first. Again, you got to pay. You got to pay the man, right? You got to pay Uncle Sam. So you definitely need tax strategies that are going to help you save money, because as you put that business back into your money, generate more leads, and make more money the next year. Again, thank you guys again for joining me, and we'll see you on the next video.